we're here with Peter Schiff of Euro Pacific. Thank you very much for speaking with us here at Press for Truth.
All right. Well, thanks for speaking with me.
So first of all, I'm curious to get your thoughts on recently the Deutsche Bank released a statement saying that Canada's housing market is one of the overvalued markets in the world. Do you think we have a housing bubble here in Canada?
Probably. There's housing bubbles everywhere. I mean, wherever interest rates are artificially low, you're going to impact asset markets, particularly something like housing, because most of the houses that are bought are not bought with cash, right? Usually there's debt involved. People borrow money to buy a house. And the cheaper it is to borrow, the more you can pay for your house. So if you have a period of time, an extended period of time where interest rates are held artificially low, you're going to have artificially high real estate prices. So that's certainly the case in Canada. Rates are too low here. They're too low in most parts of the world. And so most markets have expensive housing. I mean, it's not unique to Canada.
And whose fault is this? I mean, Mark Carney, for example, is being praised for the work he's done before he left the bank, Canada, and headed over to England. Did he do a good job, or did he just postpone the pain like Bernanke and Greenspan did?
Yeah, no, it's more the latter. And I don't think Canada's problem is nearly as bad as the problem in the U.S. I mean, we've got a bigger bubble, with even more air in it. And I think our government does even more to subsidize the housing market than this Canadian government. But the Canadian government does something too. I mean, the government should not subsidize housing. I mean, it should, the market should determine that. The government shouldn't try to create incentives for people to buy houses when, all else being equal, they might decide to rent. I mean, let people make a decision based on the fundamental economics, not based on a government stimulus or a government subsidy, which just distorts the economy and leads to a less than optimal allocation of resources. And if we convince people through monetary policy to buy houses that they shouldn't buy, why is that a good thing? Why is that a goal for society, to get people to do something that they really don't want to do? And just to have housing prices higher than they should be. I mean, maybe that's good if you're trying to sell your house, but how is that good if you want to buy a house? I mean, how is a high price good if you're a buyer? The governments always say we want to help housing, we want to help people buy a house. Well, let the price go down. That's the best way to make houses affordable, is to let the price come down, then people can afford to buy. But the government's idea is, let's keep the price high, but let's let you borrow a bunch of money so that you can overpay for it. And that is not the way to go, and it leads to a lot of problems. We saw that in 2008. We're going to see it again as this next round of bubbles burst, because like in America now, it's a very different housing bubble, because the houses are now being bought by institutions, hedge funds, private equity guys, to rent them out to the guys that lost their house to foreclosure the last time around. So this housing bubble, is very different than the last one. But I think it's even more dangerous because, these guys, they own these houses, they'll sell them quickly, right? They'll just like they're going to cut their losses on a stock portfolio. And you've got all these houses now that are owned by hedge funds. I mean, they're empty because they actually can't find tenants because people don't have jobs. They can't afford to rent these houses. So they want to rent small apartments. And rents for apartment rents are rising very rapidly in the United States. Meanwhile, we have all these single-family homes for rent sitting vacant, yet we're still building them because of the Fed. So if we had a rational interest rate policy, yeah, we'd have lower home prices, but we wouldn't be, squandering our resources.
Well, if this inevitable bubble that's about to pop in the United States does occur, and when it does, what do you think it's going to mean for Canadians here? Because we're the largest traders with them. What will it mean for Canadians if the bubble breaks?
When the dollar collapses, I think it's going to lose the most value against currencies that it's currently pegged to, like the Chinese, RMB. And so if you figure that the value of the RMB doubles or triples against the dollar, I think that the exports that you're going to see to China will more than make up for the loss of exports to the U.S. Because, you're going to have 1 billion Chinese who are going to suddenly be able to afford a lot of Canadian products. And yes, maybe Americans won't be able to afford them anymore, but there's a lot more Chinese. So I think that, whatever you lose in the U.S., you'll make up, not just China, but, a lot of other countries are going to enjoy enhanced purchasing power and the dollar collapses. So, that I wouldn't be concerned about.
Is there any advice that you might have for how Canadians can protect themselves in the lead up to some of these things that you see coming?
Yeah, well, I've said, for a while, and that's why we set up the brokerage firm here, Euro Pacific Canada, that Canada is a little close for comfort to the U.S., and so Canadians need to be globally diversified. They need to have money invested around the world. They need to be defensive against the U.S. dollar and the U.S. markets. And the one thing that Canada really has going for it, though, is as the dollar collapses, that is going to be a boom for the resource sector, particularly for the precious metal sector. And right now, everybody is, writing the obituaries for the gold market, and so the industries are down. The resource sector is maybe not, they're not getting investment capital. They're laying people off, and so that's temporarily dragging Canadian economy. But that's all going to turn around. So when the dollar collapses and that story changes, now you're going to see a real boom in the mining sector, and that'll be a positive for Canada.
Well, I guess that's why it's a great time and place to be here right now at this conference.
Yeah, well, we're here, so you're here. So, yeah, and the attendance is picking up, they tell me, here at Cambridge House. I think it's a little bit higher than last year. But, I think a few years from now it'll be far more people attending, because I think more people will be attracted to the market as the prices turn around, the sentiment changes.
And where can people go to learn more from you? What are the websites, and what have you got going on lately?
Well, I do my radio show, the Peter Schiff Show, every weekday rather, at schiffradio.com, so people can go there and listen to my radio show. They can go to the websites for my brokerage firm in the U.S. It's europac.net. For Canada, it's europac.ca. And if you're interested in offshore banking, Euro-Pacific Bank, or I think it's actually Europac Bank, EUROPAC Bank.com is my website for my offshore bank. So there's plenty of ways for individuals to invest with me. And we also put a lot of content on those sites. You can read my articles. Also, I got my YouTube channel at schiffreport.com. We put up a lot of new videos. I think we just finally got to 100,000 subscribers to the YouTube channel. Should be a lot more. Surprised actually it's not more than that. But we do have a lot of unique videos that we put up there, so people can watch those as well as listen to the radio show.
Fantastic. Well, you heard them, folks. Get out there and subscribe to the YouTube channel. Mr. Schiff, thank you very much for speaking with us.